Welcome to part two of this interview. So, we were talking about the medical expenses and how you can deduct medical expenses if you are an entrepreneur. And I think that, again, you talked about this being the most overlooked tax deductions for people who own their own business. But this saves them four different kinds of taxes. So, this could literally be thousands and thousands of dollars.
Welcome to the Jennifer J. Hammond Podcast. Jennifer is a licensed realtor, educator, speaker, and best-selling author. Jennifer's goal is to help you find your yay in every day.
So we were talking about the medical expenses and how you can deduct medical expenses if you are an entrepreneur. And I think that, again, you talked about this being the most overlooked tax deductions for people who own their own business. But this saves them four different kinds of taxes. So this could literally be thousands and thousands of dollars that if you don't understand this and you're not doing it, it could just, the same thing with the other one you talked about, the home and office. If you don't do that and you don't know how to deduct it, all sorts of aspects of that. Again, it's just going to make you cry because you're going to pay so much more in taxes than you need to. And these are just regular business expenses that as an entrepreneur, when you decide you are willing to go out there and take all the risks of owning your own business and doing this, and as licensed real estate agents, we own our own businesses. We affiliate with a broker, and for me, I'm in the TTR Sotheby's International Realty here in Washington, D.C., and I hold the amazing title of vice president, which I am grateful, very grateful. And I love helping people with real estate. It's just so much fun. I really, I love it. But let's get back to the health expenses. These medical expenses, we talked about vitamins being able to be deducted if your doctor prescribes that you need to take these. So the other thing I've heard a lot of times is somebody who needs a bicycle at home as like an exercise, and it's prescribed by their doctor. That's something that can be deducted, right?
If the doctor will put it on paper, we can do it. I've had many cases of all kinds of silly things that we've been able to deduct because the doctor said it was absolutely necessary that this person, now they couldn't get outside, or it's too dangerous for them to be outside on the street, or it was too hard for them to get to a gym where they would have one. And besides, with the pandemic, everybody was staying home last year. A lot of my realtor clients, they saved a lot of money on car deductions last year, but now they're really going to take home office because they realize how often they use their home office.
Exactly. Yes. That home office deduction is something that is so widely overlooked, and it's amazing because it's thousands and thousands of dollars. But the medical expenses, again, I think people go, oh, well, I didn't really go to the doctor that much. And yet that's the reason I kind of wanted to explore, what does that mean? How do we define those medical expenses? Because a lot of people, like you were talking about with the Lyme disease, and I didn't know that you had Lyme disease. So you're better.
Oh, yes, I was lucky. I found a wonderful doctor, but it took 5 years of antibiotics to cure it. It wasn't an easy thing. But then one day I woke up and it was all gone. It's not all gone. It's actually never all gone.
Wow,
but
yeah.
It's okay. But just be careful with your children and your friends when you go outside because they're everywhere now.
Yeah. And I think but it's important because you said you had a lot of vitamins that you took. And I think that now, again, because of the pandemic, people are much more aware of taking more vitamins. And so think about, what are the business expenses that you could take and how that could be part of the health plan that you have. And I love the fact that if you create that plan, and you may want to go talk to a doctor and say, so these are the things that you have mentioned that I should take. I need to get this in writing from you that I should have a bicycle at home that I exercise on, or that I should have a pool, as you mentioned before, or what are the things that, again, it may just be that you create a lap pool or whatever it is, you make sure that you have it. What about a jacuzzi? If somebody said you have to be in the water and have a jacuzzi.
Yeah, we call it hydrotherapy.
There you go.
That's what the doctor puts on the prescription anyway, that they might need it for daily. These are usually elderly people. I have some clients that unfortunately are quite obese, so they don't get around very well. And the doctors are hoping that maybe by doing hydrotherapy and things like that, that they'll stay away from the refrigerator and take care of their bodies better. Yeah.
Well, and then, when we're looking at how do we make, I mean, I guess I want to use that same analogy on how do we make a business healthier? Number one, I think it's because we understand taxes and we understand and we communicate with our accountant on all of our potential business deductions, and then how we can go ahead and take those and make sure that it becomes a habit that you are, again, just like with the medical expenses, if you need the doctor to have that written down for you, make sure you've done that. And then you just constantly make it a habit to turn those in. And I always think like once a month is a great way to do it, to make it like just part of your pattern, part of your daily and weekly and monthly, so that at the end of the year, it doesn't become overwhelming. So I'm curious.
And to talk to your accountant. We tell our clients, we never charge when our clients contact us during the year for questions. They're going to have a baby, or they're going to buy a new car, or what's the deduction on their new mortgage if they buy a new home. We tell them, if you don't call us, then we're going to charge you extra when we do your tax return to get you out of the mess. And you call us before before you get married, divorced, before you do anything. Please call us and we can help you to do the best from the tax point of view. Now, we don't want to let the tax tail wag the investment dog. I've had people where I've told them, okay, if you get married this year, it's going to, by two single people, always pay less tax than two married people, unless one of the married people doesn't work or something. So sometimes we're going to give them not advice that they really want to hear, but that's okay. I've been married so many times that I believe in marriage, even if it does cost more. But you need to talk to your accountant, because there's a lot of things we can fix before you do it. But once you've done it, and it might be too late to fix it afterwards, and it's going to cost you taxes. And, I don't want any client to pay more than their basic fair share, because that extra money that you can save, that can be put away for your children's education. First of all, for your retirement, which is the most important thing. Do you know that 1 out of 4 people in the United States who's retired, living on a retirement of some kind, they are financially dependent on one of 4 sources of income besides their retirement? They can't survive on a month-to-month basis unless they have help from a check from welfare, their church, their children, or Social Security. 95% of every retired person in this country is dependent. Now, do you want to depend on your children or welfare or your church or Social Security? And Social Security average check is, I think, like $1,000. No, you have to put money away for your retirement. So if we can help you save on your taxes, this is what I tell people when they come to us. We save them so much on taxes. I say, okay, now that money I just saved you, I know where we're putting it. We're putting it into your self-employed retirement plan, which of course is a 401k, a solo 401k.
So let's talk about that, because that's a really important one, is a solo 401k. And how is that different from other retirement plans?
That is such a wonderful question, Jennifer. Thank you.
I got the magic wand out for that one.
Yes. Excuse me. Yes. Here's the difference. Before 2001, the only thing available for self-employed people were unqualified retirement plans. Unqualified doesn't sound like such a good word. That would be like going to an unqualified dentist who's never been to medical school. Do you want him drilling on your teeth? No. No. So what was available back then was only what's called a SEP IRA or an IRA, or we did have KEOs and DB plans, but we won't go into those because they're a little more complicated. So back in 2001, Congress said, oh my God, we've made a terrible mistake. We forgot to give self-employed people the ability to have a qualified retirement plan. So they invented the solo 401k. Now, many of you who worked at a company, you probably had a 401k, which was very nice, because what happened was your company would have you voluntarily take money out of your paycheck, and they would invest it for you in hopefully some nice, safe mutual funds or something like that. And sometimes the companies would even match your savings. Okay, but now you're self-employed. Who's your boss? You are. Who's in charge of your retirement? You are. So you need a qualified plan, and only the self-employed plan, which is called solo 401k, is qualified. And I'm going to tell you the difference between qualified and unqualified. Now, you can have a DB plan. That's a defined benefit, but we're not going to go into that right now because that's more complicated. But the difference between a qualified, yay, like Jennifer
Yay! Qualified.
yes, the difference between that and a boo unqualified is that only a qualified plan offers at least these three things. The first thing is only the qualified plan is 100% protected from lawsuits, creditors, and bankruptcy.
Okay,
Get
say that again.
Okay, only the qualified plan that I'm talking about, which only costs $160 a year. So don't tell me you can't afford it. You can pay more if you want to, but don't do that. The one I buy, and I don't sell these plans, I just have one for myself and my people, is $160 a year. But only the qualified solo 401k is 100% protected from lawsuits, creditors, and bankruptcy, period. Okay. Okay, number two, you can put much more money into it, and I'll tell you how much in a minute. And number three, at any time, for any reason, at any age, you can borrow the money out. Now, not all of it, but up to $50,000. You can borrow up to $100,000 just during the pandemic. And you can use that money for any reason. So if you're getting ready to buy a little investment property, or maybe even buying your own home, let's say you're self-employed, but you're not a realtor and you want to buy your own home or something, fine, you can take the money out and borrow it. Now, this money that you take out, if you borrow it for buying an investment property, or God forbid, you're buying a boat, or you're buying a motorcycle, or going to Las Vegas to gamble, no. You have to pay it back within 5 years. But when you borrow the money out to buy your own home where you're actually going to sleep, then you have a 15-year payback. And this is available from the day you open it up. I mean, we have 3-year-old children that are used as models for photographs and things. And we have them already in they have their little solo 401k, and they can put money into it. So a solo 401k is the only way to go, at least for the last 19 years. If you're self-employed and you have a SEP, or you have an IRA, or you have anything else than a solo 401k other than a DB, which we won't go into, then you have a really stupid tax accountant who hasn't read the tax laws since 2001. And you also have a really stupid investment advisor who doesn't care about you. I'll tell you why. Because many clients who come to see me and they don't have a solo 401k. And their investment advisors don't handle solo 401k. So of course, their investment advisor is not going to say, well, now, Jennifer, you need to take the money out of our financial institution and move it. No, they're not going to tell you what's available. So believe me, just trust me. I have a solo 401k. I know the law. That's what you want to do. So if you're self-employed, you pay the $160 a year, because you're going to have to pay for an IRA or a SEP anyway. But at least it's qualified. You can borrow from it at any time. And if you want to, you can put a lot of money into it. Let's say we have somebody, Jennifer had a really slow year last year. She took a lot of vacations, or maybe went to see our brother in Hawaii or something. Yes, to visit Ginger the cat. And so she only made $150,000 last year. So she comes to our office, and one of the wonderful 20 people in my office who actually do all the work, I just do the talking, they've come up with $50,000 worth of business deductions. Okay, yay! So Jennifer, yes, that's very important. So we have 150, but we bring it down to 100 because we take off your business deductions. But does Jennifer want to pay tax on 100,000? No. She says, hide it, do something, fix it. So we would say, well, you can automatically put in the first $19,500 if you want to. She says, yes, I'll put it in my 401k. And if I need it, I can always borrow it out. Yes. And she says, can I put in more and take a deduction? And we say, yes, you're allowed to put in 20% of your net earned income. Well, her net earned income was the 100,000. So 20,000 is 20%. So now she's got 20,000 plus she's got the 19,500. How much is that? That's $39,500. Now, Jennifer's nice and young. She's under age 50. But if she were over age 50, she could put in an extra $6,500. We call that the geezer pleaser for people who are over age 50. So that would be 6,500 on top of the 39.5. So this is a whole bunch of money, and she's not giving up access to it because, as I told you, you can borrow it out. I did this myself when I bought a little condo up in Baltimore when my younger daughter was in law school, and I didn't want to pay rent for 3 years while she was going to be living up there. No, no, no. I borrowed some money out and bought a little townhouse. I paid $135 for the townhouse. And guess what? When she graduated law school with honors, the youngest one in her class, yes,
Nice.
yes, yes. I sold it for $210,000. Okay, so
Wow.
this was good because it was back in 2001 and things were going up, 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 up. And I
Right.
got rid of it just before things went down, down,
Right.
down, down a little bit. But in any case, if you have a solo 401k, you have access to it, you have freedom. But the most important thing is you have a brick wall around your retirement account that nobody can touch. Now, of course, IRS, if you don't pay your taxes, can come after it. Or if you get in the middle of a divorce, your spouse is entitled sometimes, although you're entitled to their 401k also. So that's reciprocal. But in any case, please, if you do anything for yourself, if you're self-employed, try to put away even 10% of your income every year, because you will be so grateful when you retire. You won't be one of the 95% of every citizen who's retired right now who cannot live without welfare, their church, their children, or Social Security. Yikes. Yikes.
Yikes. That's a
Yikes.
horrible thing that there's
Awful.
so many people, and we've actually done entire shows on that because again, it's just such a terrible statistic. And it's part of the reason that I just am so passionate about making sure that everybody knows, anyone who will listen and who is interested in finding out about how to, again, create more wealth. And one of the ways to create more wealth is to understand the tax deductions. And it's funny because I think taxes in general, it's an area that even when I first met you, I was just like, oh, I just can't stand taxes. And I realized that my viewpoint came from my parents because they hated taxes. And then I met you, and you had these, magic wands, and you had these, what are those, hula hoop things, and you would do these classes, and you would be so excited about taxes. And I was like, what in the world what is this woman? She's all excited about taxes. And it actually changed my viewpoint. And so I want to say from the bottom of my heart, Linda, I'm so grateful that you have always been so playful and you're so passionate about not only you love taxes, but you love sharing taxes and how people can become empowered to be more wealthy. And like you said, to not be part of the 95% that when they retire, they're relying on someone else to help them because they didn't do, that kind of tax planning. And I think that part of it is it's just so scary. And there's so many unknowns there, and then it's constantly changing. So again, I just want to say I am so grateful, Linda, that you always make taxes fun and interesting. And I love all of your stories. Thank you.
Oh, I thank you so much. It's so rewarding when I've watched clients over the years, and now we're doing some of their children, even their grandchildren's taxes. But I love seeing their retirement accounts grow and grow. And of course, you want to be very careful where you make your investments in your retirement account. If you have a solo 401k, there's 8,000, I think more than 8,000 different mutual funds in the United States. But you want to make sure that the person who's handling your 401k knows what they're doing. Please never use anybody who's not a certified financial planner. Just because it says they're vice president of an investment company, it's not like you are really vice president of an important company. But these other people, they're like junior vice presidents. I mean, no, no, no. If they're not a certified financial planner, it would be like going to a surgeon who's never been to medical school. You don't want him taking out your appendix or operating on your elbow or something.
Oh,
So be
no.
careful who you use. And if you need a recommendation for your solo 401k, I'll send you to Mark Moninger because he's been doing mine for, the 19 years ever since it was invented. And he does really well for me. Of course, I'm older, so he has to invest in more things that are, what do you call it, conservative. But he's done so well for me that I get to spend lots of money on the grandchildren. I don't have to ask them for money, at least.
Well, and you still get to travel the world. You just got back from Dubai, right?
Yes, yes. We went for 3 weeks and ended up having to stay 5 because the clients there were desperate for help. Oh my gosh. We got so many new clients that are over there working. Although I feel sorry for the ones working there during the summer. They do make a lot of money, I have to admit. They're very well compensated for spending a very hot summer in Dubai. But when you go there, I can set you up with lots of wonderful people over there.
I'm
too.
so excited. I can't wait to go across the pond, shall we say, over to Dubai and
Yeah.
experience that. So I know we're just out of time. I want to make sure that people know how to get a hold of you. And I know one of the things, you're so gracious about answering questions, but you also have this amazing team that people can call no matter where they are. And even if they're watching this in Dubai, your team that you have, one, they'll answer emails, and number two, they're great at picking up, answering the phone, of course, during business hours. And so will you tell people how can they get a hold of your firm, and they can ask questions for free, right?
Absolutely. We'll always answer your questions for free, or if you're a realtor or something like that, and you have a client that's asking you questions, because as a realtor, you're not allowed to give tax or business advice. We can do that for you. So if you want to reach us, it's tax-masters.com. If you'd like to send me an email, it's really easy. It's tax lady, all one word, no caps, at tax-masters.com. And we would be happy to review your tax returns and look them over and see if we can do a better job, which we always can do. I have never seen a tax return. I've never seen a tax return, at least for a self-employed person, that I couldn't do a better job than somebody else. We take out the red.
I was just going to
pencil and
say,
start circling.
You have that red pen that you take out. You take out that red pen and you circle like a school teacher. And I think it's so funny because the first time you did it to my tax returns, I was like, whoa, look at all these amazing things. And it's thousands of dollars that I should say it could be thousands and thousands of dollars. So even just asking those questions, I highly recommend that you contact Linda, email or call, whatever you want. And it's tax-masters.com. Right?
Correct. That's the real one, the original one, the first one, the only one.
In Rockville, Maryland. Yeah, not to be confused with the not so great companies in Texas that have a similar name, but we won't go there. So go ahead, and we are almost finished with our clubhouse. But Linda, if you'll stay on for a second after we say goodbye on this is our YouTube, but I want to go ahead and ask you to do, and you know what I'm going to say here. I would like for you to lift your voice and say yay with me. Are you ready?
Yes.
3, 2, 1. Yay!
Yay!
Hi, I'm Jack Canfield. You may know me as the co-author of the Chicken Soup for the Soul series. And if you want more help in getting from where you are to where you want to be, I want to encourage you to listen to the Jennifer Hammond Show